Welcome to The Explainer. For a long time, the beauty industry has been seen as this unstoppable, glamorous force. But lately, things have been getting, well, a little messy. We're going to dive into the surprising challenges it's facing right now.
Okay, let's just jump right in. Our source for this explainer put it this way, and wow, it really nails the problem we're talking about. Putting lipstick on a pig, that is a brutal assessment, right? It just goes to show you how much has changed for investors looking at this once golden market.
All right, so let's talk about beauty's bullish facade. From the outside, everything looks great, right? It's all glossy ads, celebrity lines, and endless new products. But, peel back that first layer, and investors are starting to see that the foundation, it isn't quite so solid.
For years and years, beauty was just a reliable growth market. It was a sure thing for investors. You had consistent profits, you had this massive global expansion, and the product itself was seen as a kind of affordable luxury. Even when the economy got a little shaky, people would still buy lipstick. It was a safe bet.
So, what happens when that makeup starts to crack? Because that's exactly what's happening now. That reliable story, that perfect complexion the industry always had for investors, it's starting to show some pretty deep wrinkles.
Okay, so let's get into it. The cracks in the foundation. And look, this isn't just one single thing going wrong. It's more like a perfect storm of headwinds hitting the industry all at once. First up, that post-pandemic pop totally fizzled out. Remember when everyone was rushing out to buy makeup again after being stuck inside? We all thought it was the start of a huge boom. Turns out, it was more of a short-lived sugar rush, and it definitely didn't last as long as the big companies were hoping. And then, of course, there's inflation. This one's huge. You feel it, I feel it. When everything from your food to your gas costs more, you have to start making cuts. And that $50 foundation, it moves from being an affordable treat to a maybe next month kind of purchase. It's a tough cut for these brands.
Another massive factor is China's cool down. For what felt like forever, China was the growth engine. You could practically guarantee massive sales there. Well, according to our analysis, those days are over. The market's changing, and that guaranteed double-digit growth is now just a thing of the past. It's forcing these giant global companies to go back to the drawing board.
And you can't forget about digital disruption. You've got these smaller, scrappy brands that were born on the internet. They're super agile, they know how to use social media, and they are seriously challenging the old-school department store model of the big guys. It's a whole new ball game.
So, you take all that, the fizzled pop, inflation, China cooling off, digital competition. What's the bottom line? Well, overall industry growth is now dipping below its long-term average of 4 to 5%. And look, I know that might not sound like a catastrophe, but for an industry this massive, that's a huge deal. It's like a giant ship slowing down.
Okay, but it's not all bad news. Even in a tough market like this, there are always bright spots. Some companies are not just surviving, they're actually thriving. So let's switch gears and find out who's getting it right.
And what we're seeing is really a tale of two markets. You've got brands like e.l.f. Beauty and Ulta who are laser-focused on the US market, and they're doing great. But then you have the global giants, the Estée Lauders and L'Oréals of the world, and because they're so exposed to those international headwinds we just talked about, they're really struggling to keep up.
And this quote from an HSBC analyst really sums it up perfectly. He says, "In an offer-driven industry, there will always be scope for individual companies to succeed." And what that really means is, the days of just riding the wave are over. Now, it's all about strategy. It's about having the right products and the right plan. You have to earn your growth.
So how do you actually play this as an investor? Well, our source laid out 3 really different bets, 3 contrasting ways to look at the market right now.
First, we've got the recovery play, Estée Lauder. And this one is kind of surprising, right? Because they've been one of the biggest underperformers for the past few years, but now some people are betting on a major comeback.
So, why the newfound optimism? Well, it looks like their turnaround plan is actually starting to work. Their profit margins are holding steady, which is huge, and they're clawing back market share in key places like the US, China, and Japan. The forecast even suggests they could more than double their earnings per share by 2027. That's a big deal.
And because of all that, the analyst is sticking with a buy rating and has even bumped up the price target to $105.
Okay, next up is the skincare specialist, Beiersdorf. You might not know the parent company name, but you definitely know their brands. Think Coppertone, Eucerin, Nivea. And their strategy is really interesting. They are betting big on skincare and kind of sidestepping the super competitive makeup aisle.
And this is pretty smart. They're leaning hard into the whole skincare trend, which is still growing like crazy. They're not just coasting either. They're launching new anti-aging stuff in China and even making a big push into the acne treatment market with some really innovative products. They're chasing the growth.
And this focused strategy is getting a thumbs up from the analyst. They've got a buy rating on the stock with a €135 price target. So a lot of confidence in that skincare bag.
All right, so we've had a recovery play and a specialist play, but not everyone is getting a rave review. To wrap this up, let's look at a bit of a cautionary tale.
And we're talking about an industry leader, L'Oréal. You'd think they'd be a slam dunk, but the analyst here is actually taking a step back. They're sidelined. The big worry is that after such a great run, the stock might not have much room left to climb.
So what's the hang-up with L'Oréal? Well, there are a couple of things. First, the stock has already done really, really well. So the question is, how much higher can it go? A lot of the optimism might already be baked into the price. And second, hey, they're still facing all the same industry-wide problems we discussed. It's going to be tough to keep up that incredible momentum. And that brings us to this final thought from the source material, which I think is just perfect. We've all heard that beauty is only skin deep. In the case of L'Oréal's stock, it might just be true. So for some of these beauty giants, that flawless public image might be hiding some real challenges underneath. It's a fascinating twist for an industry that once seemed completely bulletproof.